Yeah, good morning, everyone. Friday, US market continue its declining trend, uh, mainly driven by some results which got impacted. This decline is mainly with the Fed continue its tightening, and results are not showing that much great positive sign as was indicated in previous few quarters. Quite a few company have reported result bit declining, and even if the companies are declaring results, the stocks are correcting, considering the market is not expecting any great uptick in the coming period. But today morning futures are bit positive for the US market, and Asian markets are indicating some declining trend. Most of the market are down by around 0.4 to 0.5%. In commodity also, though the crude oil continue its strong movement and bounce back very fast, and again now at around near to $89. But the aluminum is down by around 1.7%. Copper is down by around 0.8%. Iron ore is flat, and steel is down by around 0.4%. So overall, the negative trend is visible in Asian market, and which may get reflected into in Indian market as well. Now I'll request technical team to take up from here.
Yes, thank you. Good mornings, all of you. This is Swati. Looking towards the Asian markets, we believe that the Nifty is likely to open with a gap down by almost 100 points, and we are likely to witness some selling pressure during the day. Friday, we have seen that the Nifty has almost touched the 50 days moving average and shown some sort of a pullback rally and maintain a positive closing above 17,600 levels. But today, again, we are going to witness a gap down. So, for the today intraday purpose, 17,500 will act as the immediate support level provided by its 550 DMA. Any move below that level or any closing below that level will extend this falls towards 17,400 to 17,340 levels on the downsides. Whereas on a higher level, 17,640, 17,700 will act as a strong resistance level. A breakout of that level only will witness some sort of a pullback rally till the time the view will remain a negative on the Nifty as such. We believe that it has a potential to reach up to 17,400 levels on the downside. Coming towards the bank nifty, for the today intraday purpose, the bank nifty has a support at level 37,300 levels. Any move below that level, we expect a fall in the bank nifty, which might take a bank nifty towards 37,000 and 36,800 levels on the downsides. Whereas on high side, 38,000 will act as a crucial resistance level. If it manages to give a breakout of that level, then only we can witness some pullback rally towards 38,300 and 38,400 levels on the higher sides. The overall view will remain bearish only on the Nifty as well as on the bank Nifty as long as it sustains below the resistance levels mentioned. Coming towards the Nifty Finance, for the today intraday purpose, 17,940 will act as immediate resistance. Above that level, we can witness some sort of a positive momentum which might take a Nifty Finance towards to 18,000 levels. Whereas on lower side, 17,740 is the first resistance. Below that level, 17,640 and 17,600 levels can be seen into the Nifty Finance. So these are the important support and resistance levels. Let the market sustains near the support levels, and we will initiate a buy or the sell call during the market hours. At the current level, I'm not initiating a pre-market call. So just we will wait for a Nifty and the bank Nifty indices trades near the support levels, and then only we can get a clear indication of the trend for an intraday purpose. Then we can initiate a buy call or sell call. I think that's it from my end. I request you guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, on Monday, last Monday, when everyone was actually positive outside, But we had clearly seen the data and had said, one should be booking profits. We were around the 18,300, 18,400 odd levels. And we've seen about 700, 800 odd points of selling in the whole of last week. And the whole of sentiment has turned negative. Now the data continues to remain negative. As I said, the VIX has risen. It has risen near the 18 levels, and because of the budget, it is not going to come down so soon. And also the UP election, so it is going to go up towards the 2025 odd levels going ahead. Also, you are seeing liquidation in the 17,500 put strike. So 17,500 was a strong support area. We've already seen a bounce twice in the last two trading days from 17,500, and now with liquidation coming in, this becomes a weak support. So most likely it can be broken with the SGX down. Probably this will be broken today, and the next real support for Nifty is around the 17,000 levels, because the highest open interest base is now shifted to 17,000 levels. So very likely, there can be further pain, and we might see Nifty going down towards the 17,200, 17,000 levels going ahead. The PCR has bounced from 0.75 odd levels, but still below 1. And that is the only good thing, actually. So that means, the PCR is at the oversold zone, still just above the oversold zone, and likely to come up. So, in case Nifty witnesses a huge amount of selling in the first half an hour or 1 hour, you might see some bounce coming in. That is the only silver lining. We continue to maintain a sell on the indices. From the stock specific front, um, Hindalco, metals were resilient, but on Friday, yes, there was some selling in the other stocks, but overall metals continue to be resilient, and we believe they can give support to Nifty. Most of the metal stocks have not seen much short built up, and that is why we believe that some amount of buying can come in. But all these metal stocks are from the private space. The public sector metal stocks like SAIL, National Aluminium, they've witnessed negative bias and a short built up. So stay away from those. While one can look to buy Hindalco when the bounce comes. Also, from the banking space, it gave good support, and HDFC Bank has seen short covering. So HDFC Bank, after a long time, should now start to perform again and witness good buying action. The data is positive for the stock, and most likely, along with ICICI Bank, these two stocks will move up in the coming time. From the selling space, Bata, Infosys, Emphasis, these stocks, in fact, IT as a whole looks pretty weak because there is short built up, and Bata as well from the footwear space. So they've witnessed some negative bias and can witness some selling coming ahead. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. Titagarh Wagon has received an order for design, manufacture, and maintenance for 10 years of 38 trains by an Italian company. This order is a big order, with a size of almost 2,400 crores. So it is positive for the company. Over Friday and Saturday, many banks came out with results. Out of all those, ICICI Bank result was the best one. The result was above expectation. All metrics on asset quality side continue to improve with every passing quarter. GNPA declined from 4.8% to 4.1. Slippage ratio came down from 2.9 to 2. And also BBN below rated book continues to decline. ROE came at 15.2%, which has not been seen in the last 15 odd years. This is a significant achievement for the bank from where it was a few years back. Bank should continue to outperform the banking index, as well as the re-rating should continue. CSB bank result has improved. As guided in previous quarter by the management, the bank was able to make huge recoveries on the gold side, which led to decline in GNPA from 4% to 2.6%, and it is on the way to achieve the 2% mark by Q4, I feel, which they had earlier guided. So once the bank again starts to grow its loan book, we feel that re-rating should again start for the bank. Loan growth was at around 11-12%. We feel as it moves closer to 20%, the market will start rewarding the stock. So we are positive here. HDFC Life result was above expectation. Although APE growth was lower than industry growth, it grew by 20% versus industry growth of 30%. VNB margins has been stable since last 5 quarters at around 26.7%. We are positive in the long-term perspective. SBI Life result was also above expectation. APE growth was in line with industry growth of 30% here. VNB margins were above expectations at 29.5% for Q3. If we look at for 9-month period, it was at 25%, which is in line with other insurance players. The high margin for this particular quarter was because of lower expense ratio this quarter. IDBI Bank result remained weak. Both slippages and credit cost increased quarter on quarter, so one can avoid. Same with Yes Bank, the gross stressed book remains high and in fact increased slightly from 52 to 52,000 crores against 50,000 crores last quarter. This is almost 29% of the total loan book, so one can avoid Yes Bank. Bandhan Bank result marginally was above estimate. Although stressed loans have declined from 24% to 17% of total MFI loans, it is still a large amount. The bank wrote off loans worth 1,200 crores this quarter, and despite this big write-off, the GNPA ratio remained flat quarter on quarter at 10.8%, as slippage remained high at 15%. So with a 15% kind of slippage ratio in a quarter which was decent, the December quarter, we feel still there could be some pain left in the book, so we are neutral. Last result, L&T Finance came in line. NPA was flattish quarter on quarter. However, the issue here is more about the loan book, which continues to decline as companies reducing its exposure to infra and developer portfolios. These two segments still form about half of the loan book, so I don't expect any growth in the total loans for L&T Finance even in coming quarters. So we are neutral here. Thank you.
Good morning, everyone. Sharda Cropchem came out with the results, and result was above expectation on all the fronts. Sales grew by 78% YOY versus expected of 600 crores. The sales came at 880 crores, and even the EBITDA margins were above expectations and one of the best in the last few quarters, and came at 24% versus the expectation of 19%. The share is trading 12 times FY23 EPS, which is attractive. So we expect that stock should do well in today's trade also. Heritage Foods has come out with the results, and results were below expectations. This is as seen in the earlier announced results of Dodla Dairy also, where the dairy companies are not able to report good results this quarter. Here also, though the sales grew by 10%, margins were a major disappointment, which came at 6%. Gland Pharma announced their results, and results were marginally below expectations. The EBITDA margin came at 32.8% versus expectation of 34%. However, the company has given an outlook which is positive, so we don't expect much downside for the stock in today's trade. Polycab announced their results, and results were above expectations. The margins came at 10.7% versus expectation of 10.2%. The share is trading 34.6% in FY23 EPS. We are positive on this name and like this company, so continue to keep our positive outlook on the Polycab. Thank you.
Good morning, everyone. Tanla platform has announced the result. The company has posted improved set of numbers both on the revenue and the margin front. Stock is trading at a PE of 40.3 times FY23 EPS. Cybertech system has posted okay set of numbers both on the revenue and operating profit front. PAT was impacted majorly on account of higher other income in last quarter and tax write back in last year. Inox Leisure and PVR Limited both have reported ahead of expectation numbers both on the revenue and the margin front. Thank you.
Good morning. JSW result was below expectation. Standalone sales volume came at 4.4 million ton versus 3.8 million ton quarter on quarter. EBITDA per ton were below expectation at rupees 16,993 per ton due to a $100 per ton increase in coking coal price quarter on quarter, and a provision of 1,056 crores towards upward revision in iron ore prices. The management has maintained its production guidance of 18.5 million ton for the current fiscal. However, they have reduced their sales volume guidance by 5% to 17.5 million ton due to lower steel consumption in quarter three. Going forward, we expect the coking coal price to be at elevated levels, indicating volatility and future price uncertainty. We expect the cost to increase by 2,500 per ton in the next quarter. We are neutral on this company. Hindustan Zinc result was broadly in line with expectation. Revenue came at 7,990 crores versus expectation of 8,074 crores. EBITDA came at 4,370 crores versus expectation of 4,375 crores. The management continues to maintain its guidance of mine metal production of 1,025 to 1,050 kiloton for the current fiscal, and for FY23, the expectation is to reach 1.2 to 1.35 million ton with expansion on the cards. EBITDA increased by 31% quarter on quarter, mainly due to robust LME zinc prices. Cost of production rose marginally by $24 per ton due to increase in coking coal cost and the availability of linkage coal of just 3 to 4% as against allocation of 25 to 30%. Going forward, the zinc prices will continue to move upward in the near term. However, imported coal prices are likely to remain high, which will impact company's profitability. We are neutral on this company. Thank you.
Yeah. Apart from this, Reliance came up with the numbers, and numbers were in line with expectations. The ARPU came ahead of expectations at around 151 rupees. They got price increase benefit larger than expected in this quarter, and but the subscriber base has come down by around 2% quarter on quarter. So that has neutralized the overall impact, and EBITDA has come ahead of what was expected in the by around 10% expectation. The expectation was around 9,300 and the EBITDA came at around 10,000. So on Geo front, Reliance result was a bit ahead, and retail also the results were more in line. The EBITDA expectation was at around 3,600 and it has come at around 3,500. And O2C also saw below expected result with EBITDA came in at around 13,500, whereas the expectation was at around 15,000. So overall results was more of a neutral. There was some gain in Geo front, but retail was more of a flattish, and O2C business saw some lower gain. And because of the higher prices, a small oil business which is there has seen good growth in EBITDA. So overall result was neutral. Super Stop reported numbers day before on Thursday, and yes, on Friday they had a con call, and management has indicated that though Q4 may be impacted because of the third wave of COVID and lower footfall in the lower footfall in the malls. But they have a very good expansion plan in the long term and are targeting to double their revenue in next 4 to 5 years. That is a growth of around 18 to 20% CAGR for next 4 years. And also looking to expand the margin based on their key drivers, like they are concentrating more on beauty, they are concentrating more on private label and first citizens and omni channels. So this will they are trying to improve their EBITDA margin as well in coming period. See, Super Stop has not performed since last many years, maybe 5 7 years. The stock is sideways. We had seen change in management, and Venu Nair, a veteran from the industry, has joined Super Stop and is driving the changes in the company and has also built up a team to change the outlook for the Super Stop. Venu Nair has come from Tata, that is Trent, and where his performance was well accepted. So quite possible that there could be good changes coming up in the Super Stop as well. This quarter was good, but still it was a seasonally strong quarter, so we can't take it on the face of it, and Q4 is again impacted. So it may take some time to give a clear picture whether the direction which has been suggested by the promoter, by the management is coming through. But considering the valuation, which is at around 8 times FY23 EV by beta, the stock looks quite underpriced as compared to the other peer. And if suppose things materialize, then there is a very good scope for the stock to move up. So we remain positive on the stock. Any corrections in the near term because of the Q4 soft quarter, one should use stock to accumulate from a long-term perspective. Apart from that, Supriya Life Sciences also had a con call on Friday. We had seen that the shares corrected substantially on Friday by almost around 18% because of the poor Q3 results. But what management has indicated that Q3 is comparatively a soft quarter from a seasonal perspective, and generally they have a lower sales in the Q3. And also they one of the consignment which was supposed to move in Q3 has shifted to Q4. And generally Q4 is very strong quarter for them. Q2 and Q4 are very strong quarter, and has indicated that Q4 will be the best quarter in last 4 quarters. So overall, company has indicated that they continue to maintain their earlier indication of 20% revenue growth and maintaining 40% plus EBITDA margin. So we feel that the share should bounce back on this and should come up from there. Valuations are not so demanding, so it's reasonably priced around. Stock is well priced based on FY23, maybe at around 23-24 times P. So the upside from there looks limited, but company is likely to perform. So looks positive from the long-term perspective. Then Vardhman Textile came up with the results, and the results were okay. Quarter on quarter, we saw some decline in EBITDA. Though year on year it looks very great, but last quarter to this quarter it has shown some decline. And company has announced stock split from 10 rupees paid up to 2 rupees paid up. So now results for next Friday. Atul Limited is likely to report numbers, and numbers are likely to show some improvement quarter on quarter, but it still remain short of their normalized margins of around 20%. They are expected to report revenue margins of around 18.5%. So though the result will show some improvement quarter on quarter, but will not be able to reach to its normal margin of around 20%. Revenues are likely to grow by around 2% quarter on quarter. Bharat Electronic is likely to report good numbers. Revenues and EBITDA are likely to grow by around 34% and 40% year on year. This is to some extent also driven by lower base in the last year. But anyhow, it's likely to show good improvement year on year. Then Blue Dart is likely to report numbers, and numbers are likely to be showing declining numbers. The Chambal Fertilizer is also likely to show declining numbers. Here, quarter on quarter, year on year, we will see 10% increase in the margin, but 15% decline in EBITDA. Dr. Reddy is likely to report okay set of number. EBITDA and sales are likely to increase by around 10% year on year. Then GSFC is likely to report declining numbers. Quarter on quarter, EBITDA is again likely to come down from 13% to 9%. L&T is likely to report numbers. The order booking is expected at around 50,000 crores, and core EPC business is likely to show more of a stable set of number. Though the subsidiary like IT company has already came up with very strong numbers, so consolidated number may be showing some comparatively improved number. Marico result is likely to show decline. Volume growth is expected to be flattish year on year, and EBITDA margins are likely to come up by around 200 pips year on year and likely to remain flattish quarter on quarter. Then Sagar Cement is likely to show declining numbers on account of increasing cost and decline in EBITDA per ton. Vedanta is likely to come up with a number. We had already seen that Hindustan Zinc has come up with a number which is more of a, in line with expectations, and around 50-60% of Vedanta is of Hindustan Zinc. So Vedanta is also likely to show more of a flattish type of numbers quarter on quarter. Then AU Small Finance is likely to report number. Here NII growth expected at around 1.2% quarter on quarter, and PPP growth is expected at around 14%. And there is some increase in provisioning expected, which may have an impact on the PAT, which is likely to decline 5%. So numbers are likely to be more of okay or marginal declining. Kotak Bank is likely to report number. Here quarter on quarter NII is expected to grow by around 4.7%, PBP 4.5%, and PAT is likely to grow by around 2.1%. Considering HDFC and ICICI Bank, this shows comparatively a softer number. So lower growth expected from Kotak. So that's all from us. Thank you very much, and have a great day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.